just total strategy workshop. I think we had some pretty good feedback. So hopefully you can check that out on my channel, youtube.com/Chris Pulver. I did put a label on there. Hopefully it took. I did it yesterday. Let's go to lot. Yep, there it is right there. So if you go to my YouTube channel and click on live, this thumbnail here for practical options, free option strategy workshop. So that was, we combined like the last little bit of the final hour, but mostly it was just full on SPY examples of a long call, bullish spread, like a bull call spread, a bull put spread. So debits and credit spreads, and then doing a put, buying a put compared to a bear put and bear call, both debit credit spreads. It's really it's a workshop doing exactly what I do in my $27 practical options course. So just to kind of continue to show, hey, if you're comfortable trading options, define risk, know your break evens, know the cost, know the risk, know the reward, know where the line in the sand is at on your charts. I think we can, get a lot more people to enjoy trading options versus the confusion of, I bought this option, price went up, I didn't make any money, because generally what happens is people will buy calls to speculate because they're told it takes less money to control, the shares, which it does. But I don't think people understand the nuances of how time works against you when you're long an option. So I prefer to trade spreads. I know that's been a big like sticky point for a lot of, members that I've been teaching here at Prosperity Pub, but I'm here to tell you that you're all smart and you're all capable and you should trade the best way you know how. And to me, that's what I do. And so my style is not to speculate on needing price to do so many things for me that are kind of out of the norm and lower probability versus do what price can do and trade with a probability edge and, know that I'm capping my upside, but also knowing that the probability profit is way higher. So anyway, good stuff. Okay. Should be on now. All right. We should be streaming now. Good. So check it out. That would be youtube.com/financial wars. See if we're streaming live. And we're live. Cool. Okay. So we're pushing both. Alrighty. 9:17 markets opening in 13 minutes. Prepare for some volatility. Maybe. I mean, that's a pretty massive gap, 17 to, 20 plus. Obviously we saw the market creep up into the higher 20s. Are we going to have like a volatility type event where we're into the, 20s and 30s again? I don't know. I mean, what was insane about this little rip in the volatility index is that the markets were still within like that 2 to 3% candle from October 10th. So the markets, even though we went from a, 16 VIX to a 29 VIX, the market was barely down like 1%. And from the all-time highs, I mean, look, there's still room. There's probably room to fall back. I think there is room. There should be a correction here, whether it's down to the 21 or the 50-day. But we will see if the market wants to, pick itself up and dust itself off for a end of year rally. I mean, I'd rather get this over with now than having the market go to like 7,000 plus and then like literally crash at the end of the year or the beginning of the year. It's like this makes it a healthier market. So sideways is a bit of a direction. If we're going to decline a little bit, that's fine. I would say technically what I don't want to see happen is we don't want to see price doing too much damage to this October 10th candle. If we come back down to the 21 period, it gets picked back up. Come back down to the 50 period, gets picked back up. That is probably a healthier sign of the bull staying in control. But if we come back down to this candle low, possibly, at the candle low, closing below the candle low, now I call into question the market's ability to, if it pulls back, is this a lower high and then a lower low is coming? That's what we don't want, right? So if we slide aggressively, take out that October 10th candle, that might be a bit of a topping pattern. And, this leg lower, if that's the case, is not going to be fun. That's going to be either a terrible end to the year or that's going to be a very rough start, volatile start to 2026. So if we get a bounce, that's good to kind of maintain this fairly aggressive, very trendy bull market. Right? Sean says, as far as daily profit play, would today be a good day to? Not necessarily. I mean, again, we can sit here and we can talk about every nuance of price action. What we do know is We're going to open up way lower. Futures down 1%. We went from 1.15, 1.17, now to 1.01. So futures is retreating a little bit from the decline. Again, take it in stride. Market's going to open here in about 10 minutes. So we're opening up about 1% lower, which puts us all the way down here. Okay. That's crazy. Like we're opening up way down here. Now, I'm going to shift my VIX box based on two things, right? If we can come down and say, okay, from the close here, from the close yesterday to the 200% ATR, that is a 2% move. We shouldn't see price go beyond this. Like if it does, it's a bit of an outlier. However, to be safe, if we open up 1% lower and we indeed fall another 1.3%, that was our VIX calculation, 1.2%. Maybe it's a little bit less now, but let's go 1910 divided by 16. So I'd say like calculating a 1.2%. I'm going to be really conservative. There is our drop. So let's say we go 1+% here to the downside. We go another 1.1 to 1.2%. I mean, I'd probably be looking to do a bull put spread or a broken wing butterfly down here, which is way out of the way. If I want to get filled, probably a bull put spread. So if price is going to open and then fall more aggressively, we might get filled on that level. But hopefully going out far enough that based on our calculation, we can be okay. Now, the only concern with trying to call the bottom today is if the VIX continues to go higher, then our bottom is not necessarily safe. Okay. And on the call side, I think we have to respect the level. So if we open up here 1+%, we have a rip of 1.2%. I mean, I'd be looking to sell bear call spreads up here, right? We gap lower. There's our 1+% from the opening price. That should do a pretty good job of containing everything. So it's going to be some pretty wide levels today. Maybe the best way to get filled is we'll take a look at our, probably 10, 12 delta for an iron condor. And then look at our, bear call spreads, bull put spreads for nice headline, brace for impact. Okay. Let's see. Sharply lower, dollar, gold up, crude down, Bitcoin. I mean, gold is down actually. Let's see oil, 10-year yield falls. Let's take a look at that. Sharp declines. Wall Street heavyweights, Morgan Stanley, Goldman Sachs caution that equity markets could be heading towards a drawdown, underscoring growing concerns. I love it how they blast through all-time highs with, they're making money hand over fist. They're like, we might fall back. We might pull back a little bit. Funny how the narrative can just quickly change like that, right? Let's see here. Prime for a pullback, given overextended run, lofty valuations. I know this guy, Ed Yardeni. Listen to him quite a bit. While earnings have been bullish, the signal from barometers, investors and bears. Investor sentiment's always the pain trade there, Ed. Valuations, yes, they're compared to the dot-com bubble. I get it. Powell said not a bubble last week. Earnings. Again, I think price action is ultimately what we have to pay attention to. If we, like I said, if we see price, falling aggressively down below the October 10th candle, then I'm way more cautious. If we are below the 50-period moving average, I'm way more cautious. There's still room to find dynamic support, but I'm still way more cautious below that October 10th candle. So that to me is my kind of short-term line in the sand. If we fall down to a 21 or 50 day, that's okay. We fill a couple of gaps, that's okay. If we crush this October 10th low and we're below the 50 day, and all of a sudden the 50 becomes the 100, 100 becomes the 144 to 200. Yeah. It's still a bull market. Like it's still technically a bull market, but obviously that's going to happen quickly. If that happens quickly, it's going to cause some hesitation out there. So we will see. I'm curious how this gets flipped from the administration. If the market's down 3% or 5%, does anything come out of Trump's mouth? Maybe, but maybe not. So again, we sit here, we come in day after day. We approach the market, tactically day after day. Let's figure it out. Okay. So my tops and bottoms today are going to be pretty conservative, but also I think high probability. So if we gap lower, I'm going to measure that 1.2% move, look at some bear call spreads. Okay. And from the gap lower, I will also measure another push with the VIX box and take us down to like another 1+%. So I'm looking at bear call spreads probably above the gap fill and bull put spreads way down here. And price is going to open and kind of hang out. Now we can obviously look at a 10-12 delta iron condor today for daily profit play, because if we open up right here and price just kind of hangs out for the day, because it's like the shock factor of, my gosh, the market's down over 1%, but there's no real flow with it. I mean, maybe the market just pauses for the day, right? I don't know. The market can obviously open, slide all morning. It's like, wow, what a terrible day this was. The market can also open, spend this entire time grinding back up. It can open and it can do absolutely nothing. That's what we're dealing with. We don't know. So what am I trying to trade? High probability, let price do what it needs to do, allow the market makers hopefully to do the thing. We are negative gamma. So that's one thing I'm a little cautious of, is negative gamma typically means that more flows are buying puts rather than selling puts, right? You sell puts, you provide a floor. You buy puts, you're looking to see if you can ignite some of these like short-term hedges, and this might, accelerate to the downside. Okay. All right. We got 4 minutes for the open. My waterfall is open to fill from yesterday. At what price, Sean? Which one? Let's go SPX. The 58, 20, 10. I mean, this is the one that was pending for $1, right? That call spread's that's not gonna work. I'll cancel that trade. Let's see here. November 7th is Friday. Broken wing butterfly. Okay. This call spread for the Friday is not going to work either. Bull call spread hasn't been filled. And this one is another waterfall trade. All right. So I got a couple pending orders on waterfall. If those fill, I'll add them into the mix. Okay, the 55 cents one. Gotcha. I mean, I still like the trade. I would, two things, right? Look at the strikes. December 26th was not an expiration that I saw before. So that was one thing that we noted yesterday in class. I'm not sure where that expiration got thrown in, but I'm pretty sure it wasn't there like a couple weeks ago. So they threw in a December 26th expiration, I think. And we actually used that yesterday in waterfall income. So what you can look at today is more than likely you're going to fill. To be on the safer side, since we're opening a gap, pretty big gap to the downside today, and the VIX is up, is maybe just shifting your strikes a little bit lower to whatever a like 10 delta is, or a 7 delta, and start there. Or if you want to, since the VIX is higher, take the price, go down 10% from today's price, you go down 15% from today's price, and look at a fresh trade. So anyway, what I'll do after our daily profit play session is I will look and see where we are at, and possibly look at considering some strategy ones for waterfall income if we're going to get some bounces in here. Okay. Or not sure what that means, David. I mean, there's risk in the trades, but are you underwater when all of our levels are like 5,500, 5,600, 5,700, 5,800, 5,900? Like we're so much lower than current price. All you're taking on is a bit of volatility. Oh yeah. They should be up. I mean, I was going to say like literally every trade but one yesterday was, I mean, one was break even. The other ones were all like between 60 and 80% profit. So we should be good. We closed out the QQQ trade yesterday for a winner. So all of our trades on DIA were winners. All of our trades on IWM were winners. All of our trades on SPY were winners. All of our trades on QQQ were winners. The trades we have open right now are SPX. And we had one fill yesterday as well. Okay. All right, let's bring up some real-time levels. and have a look. So markets open. I'm looking for price to read here. Futures down over 1%. We should be opening up somewhere down here. Still waiting. There we go. Opened up around 67.88. Try to get a read on this right now. 67.73 to today. All right. Oh, there. Oh, geez. I was like, I'm looking in here. It's way down here. Got it. So here's price. Price from the close yesterday opened up over 1% lower. So past the 100% ATR, nearly at the default VIX box from the close yesterday. Like I said, to be conservative, I'm going to go a little bit further out from this level. You know, VIX is at 19. Let's go down another 1%. Here's another 1 point. I got to go even lower. And this may be very, very conservative, but I'm going to go 1.2. That's a 66.96. So I'm going to go 6,700, 66.95, and 85. If this trade fills for $1, I'm going to take this trade. This is a broken wing butterfly. Okay, so I'm going 6,700, 66.95, 66.85. That's a broken wing butterfly. If I wanted just to do a bull put spread, I can do a sell at 95.85 for, let's go $2 on that. 95.85 and 90.80. Just make sure I'm not overlapping here. So I can do that, right? So I don't have, yep, perfect. So I can go sell the 90, buy the 80 for $2. That's probably not the smartest trade, to be honest. I'm going to cancel those. I'll cancel the bull puts. If I get a butterfly spread that's low risk, that's a little bit more risk on the bear call. So, or bull put, I'll take that one out. But I'll keep the butterfly spread. All right, now let's go to the call side. So right now here is current price. I want to look at the 10 delta, see if we get filled. So we'll go current levels. 10 delta, you could argue like maybe we should go a little bit higher delta on the call side. But let me measure from this level 1.2, so 68.55. 68.55. And 60 by 70. And now let's go to deltas. So I can go 10 delta, which is a 45 by 50. And a 10 delta 67.15 by 10. See if this fills for $1. I'll put a pending order in. All right, I'm going to replace these bear call spreads with a broken wing butterfly. Okay, so daily profit plays, pending orders coming in. I've got an iron condor set at $1. It's trading about 91 cents right now. Coming in hot. New trade. Today's the 4th. Okay, I want to see something really quickly on this trade. If the iron condor, if I can maybe shift the call side down a little bit. Let me see something here. So this is a 45 by 50. If I shift this down to maybe, let's go like 25 by 30. And then 15 by, okay, hang on. So maybe the 25 by 30. See, I'm just going to try to get a little bit more premium on the call side, 35 by 40, and I'll keep the puts the same. This is over a buck. I'll take this guy here for a buck. Maybe this will go. Let's go $1.10. See if this fills for $1.10. Come on. All right, just got filled at $1.05. So I'm putting two trades in. There's 68, 45, 50 filled. This is a 35 by 4. All right, so 68, 35 and 68, 40. And then 15 by 10, that got filled at $1.05 credit. So that trade is in. And then I'll keep this other one with a 45.50, 15.10. And see if that also gets filled for a buck. So 35.40. Let's go 25.30 and shift this one a little bit lower. So 15.10. That broken wing, maybe I get surprise fill on that broken wing today. All right, so here's the deal. Because we are dealing with a much higher volatility environment, I'm trying not to be a hero today at the $1.05. If this pays, let's go down to 85 cents, 80 cents, 75 cents. Just stick with the pretty straightforward, like 20, 25, 30% take profit. So if I go 30 bucks out of the 105, that's a 28%er. So I'll set a 75-cent debit on this one. So here, okay. And then let's see from the lows today, 1.2, 68.50. I'm going to put in one broken wing. Let's buy the 45, 50, 60 for $1. All right. So Daily Profit Lay has the trade in. I'm going to throw in a couple of bonus trades here if you're interested. I'm going to put in a broken wing butterfly top, which I'm adding this in right here. So I'm buying the 45, 68.45 call, selling the 68.45 call with two contracts, and buying the 68.60 call for $1 credit. And a broken wing. Bottom one for broken wing would be the 6,700. 6,700 put. 67.95 put. And 85. Yep, 66.85. For $1 credit. All right, so two bonus trades if you want them. I don't know if they're going to get filled. I'm putting them, pretty much based on the volatility right now, the gap plus the volatility box, which is like double conservative, putting that as broken wing butterfly, and then a gap fill call side. See if that's a broken wing to the upside. Gamma wise, here's what I have in real time. Nothing really past the 6750 and 40 zone. We'll see if this kind of stabilizes in here. Crazy how there's like literally zero positive gamma right now. I'm going to switch this up to so this is ultra short term, which is strictly 0 day. Okay. If we get past 6750, I need to look out a little bit bigger. I'm going to go to now like Friday's expiration and see where these things are accumulating. So right now, biggest gamma levels we have out to, 6750 or 6800. That's kind of where we're at. Like, it's crazy how there's nothing up here for right now. This obviously changes in real time, so we'll see. But huge pressure to the downside. It might just close. All the damage is done. We kind of stabilize for the day. Not sure, but we got decent trades in. It's just let's stick to the mechanics of a daily profit play. Okay. All right. So that's not really as helpful as I wanted it to be. Let me go to the swing gamma. So I'll go a little bit further out. This is up to 2 weeks. See if we have any big levels here. It's like all of the positive gamma is gone. Interesting. So I don't see much flowing below 6750 just for today. And our put side is below that. So this actually is good. Let's see where things are at. But I'll go back to short term now. Okay, so we'll keep an eye on that one. So negative gamma, 68 is our stickiest level. It'd be quite the gap fill. Let's see where we're at on the technicals. Just above the 21-day moving average. Just above it. Futures, tested the 21-day moving average. Futures technically back here tested the 50-day moving average, which is why I think the market found support. But we will see. Chuck, what's the position you're referring to? Yep, you're correct. Sorry about that. I'm going to retype that bonus trade. So the bonus trade, broken wing call fly, it's a 68.50 is the sell. There you go. So 45, 50, and 60. Those are the 3 legs. It's correct now. I typed in the chat. Okay, so let me get our levels in. The Iron Condor is a 35 and 15. So 35. 68.35 and a 67.15 there. So if price can stay inside this range today, which would be from opening bell, from opening bell price, that's about a 0.86% swing up and a 0.9% swing down. So unless we are going to see the VIX, and again, this is the weird thing about the market this year is like we've had more like wild upside risk where it's like, holy crap, it actually hit the VIX measurement to the upside, which is pretty unusual. We'll see. The day is not done, obviously. But what I'm saying is if, as we're in session today, if things are, choppy, that's perfect for daily profit play. I don't think today is the day that we want to be a hero and try to hang on to this trade all day. So I will stick to the mechanics. In for $1.05. Let me try to get out at 80 cents, 75 cents, take my 25, 30%, walk away. So I probably just need like 60 minutes in the trade. And if price is cooperating, we'll be good. Okay. Chuck says Chewy. What's the trade that you're in, Chuck? What are you in on Chewy? Give me the exact trade. Yep. I'll type it in again. Sorry. I thought I copied the whole thing. So this is $1 credit pending. All right, Chuck, I'm looking for you. Type in what your trade is. I'm a little perplexed that I'm not seeing like any gamma levels popping up to the upside. Especially if I see price getting above 6,800. mean, clearly something has to happen here, but maybe not. Maybe it's just like, well, price is going to be here, here. It's just going to get ugly and volatile. But I'm curious. Well, that's a big ask. I was going to say if we did like a kind of center price here, that's so random to be like, oh, I'll put in a iron butterfly and see if this level sticks. I mean, I don't know. Maybe it does. 67.80. I'm curious what I could get for right now. 67.85. If I went 85 to 05, 85 to 65, 17 risk three. It's like, it's not bad, but there's going to be a lot of fluctuation there too. So probably going to pass on that trade. This is an unusual read for Gamma today, but that's what happens. Like gaps will definitely throw off um, kind of the like you have to scrap the like previous day's close. You kind of have to scrap the plan because once we gap lower, it's like this is almost like a brand new like island price action, right? So the market maybe respects the fact that it can't go farther than the previous day's close, and we maintain it with the market maker move, blah blah blah. Or this price action is like this is now. I'm trying to think like the starting point instead of this being the starting point. The open is the starting point, and you have all the potential volatility. So I don't know, just trade carefully. That's all. Um, and if the VIX gets up above 20 again, I'll probably start selling some premium for my project options edge. That is almost a guarantee. So if we see the VIX right now up at it's fading a little bit to 1871. But if the VIX is back into the 20s again, like I'm selling some premium like it did here, I will probably do it again to the end of the year. I have like almost $1,000 worth of premium by December 31st. That is all the way back down to April lows. So I'm pretty sure that's safe. But the only way I was able to get those credits is because the volatility was so high that the premium was really nice. All right, Chuck, let's see. Um, Davis says, I'm getting a credit of 545 on the broken wing. Is that right? No, that's definitely not right. Double check your expiration. Double check your legs. I'll build it out right here. So I see your comment there, Chuck. Give me a second. So if I'm buying the 68.45, 68.45 with one contract, selling the 68.50 with two contracts, and buying the 68.60. Right now, that is trading for 20 cents. So make sure it's a 1-2-1, and the two contracts are the sell strikes. So 6845 is a buy call. 6850 is a sell call with two contracts, and 6860 is a buy call with one contract. Again, the broken wing butterfly is a combo spread of a debit spread with a wider credit spread, which allows you to finance the trade. So double check those legs, David. It should only be trading for like 15 to 20 cents right now, which I'm not taking the trade at 15, 20 cents. I'm looking to put it in a pending order at $1. Okay. You're talking. Well, that's the put side then. Hang on. That's the put side. Put side, I did a 6,700. So I'm buying the 6,700, selling the 6,695 with two contracts, and then the 85. So 6,700, 6,695, 6,685. That's still trading for 10 cents. Again, pending order at $1. So those are all puts, right? 6,700 is puts. The 68.45 are calls. So if you're doing the broken wing call fly, it's way above current price. You're doing the broken wing put fly, it's way below current price. Got it. Okay. All right. Chuck, let's see what we have here. Opened this trade yesterday on my own. WFC, WMT. Chewy has a butterfly spread, 7th of November, 32 strike. Buy put 32.50, sell put 33. For a butterfly spread there, Chuck, I need another leg. I need another leg. You went out to the November 7th, which is Friday. So what's a butterfly spread? Buy put at 32.50. Okay. So do you have two at the 32.50 or do you have one? I'm not seeing enough strikes in there for a butterfly. So I've got 33. You're saying that it's a buy the 33 put. Okay. Where you're buying the 33, right? Oh, okay. I see 32 strike, 32.50, 33. Got it now. Okay. So you've got the uh buy the 32, sell the 32.50. Okay. So this is where you want it then, right? What'd you take the trade for? Like you're in the butterfly right now, which is perfect. This thing is super tight. I mean, you only have a 50 cent wide butterfly, so it's probably dirt cheap. But the fact is, you're at your strikes now. The issue is, no magic happens here until the seventh. Like if you want your max profit of $70 or whatever the max profit is, with this trap, you're not going to see that until Friday, right? So what'd you take the trade for right now? Like the trade was in for what? I'm guessing this trade was probably like 5 or 10 cents. Yes or no? Because you're pretty much sitting at the sell strike, which is a good thing. So what'd you execute the trade for? So here's what I'm thinking. I'm curious what you show. You got in for 10 cents. I mean, right now the thing's showing for 19 to 20 cents. If I was in the trade, if this is my trade, and let me see where Chewy's at from a price standpoint. So we've been falling for the last couple of days, right? So for the last couple of days, Chewy has fallen. We're trading at 32.81. You get in for 10 cents is now showing 20 cents. Take the profit. That would be my trade. If I'm in and I put in a trade for a 10-cent debit, it's trading 20 cents credit and it's not near expiration. Look, the odds of you sticking around this level by Friday is slim, like slim to none. If there's any volatility here, you're going to slip through that 50-cent window and you're going to make $0 on your trade. So a 10 cent debit that's now worth 20 cents credit, that's 100% winner. I say take the profit. Not financial advice, but if it was my trade, that's exactly what I do. Because you set the trap, price is in it, you still have a couple days to expiration, but all of your profit trap doesn't fill until Friday. So you're up 100%, man. I think that's a great trade. So that's my trade. If I was in that butterfly spread and I'm up 100%, I'd take it. Okay. If it's not closing, then work it down. So if you try to close it at 20 cents and it's not filling, close it at 19. If it's not filling, close it at 18. Not filling, close it at 17. Not filling. It should close somewhere. The problem is look at our bid ask. Bid ask is really, really wide. Somewhere in between. I mean, obviously, I'm hoping you get filled at like, maybe 15 cents, 16 cents, 17 cents. But this is showing like a mid of 19. So I think, 20, 19, 18, 17, even worst case would be like maybe 16 or 15 cents would still get you a decent return. Okay. Take profit, SPX. Yep. So I'm trying to go after like 80 to 75 cents debit. So I put in $1. We're filled for $1.05. I'm putting it in for a 75-cent debit to close. Yep. We'll keep an eye on it. So this is what I'm watching for. Let me see one other thing. Smooth this stuff up here. This is I have a broken wing call fly. Okay, so this one we're in. So we're in the 35 by 40. I still like that trade. And then we have the broken wing 45, 50, and 60. Like I kind of like those trades. I really like those trades. Um, I would be a little annoyed to have these call sides be threatened with the market be down 1+% at the open. I'd be really annoyed, in fact, but obviously the market can do whatever it needs to do. I'm hoping that a broken wing butterfly trap is something we can take and get, maybe some profit on today. But let's see if the market is just like down, fighting back, and look left on the chart, possibly this level or this level offering some near-term resistance. So this is support. If it pulls back into this area and then rolls back over, then we go from this is support to become resistance, and we come back to center price, which should help us make our profit and daily profit play. Okay. Rick, sure thing, man. Yeah, Chuck, was that the question you had for me last week, by the way? Last week you were asking about butterfly stuff. Was that the trade? Because I think that was during the practical options or during session last week. But hopefully that helps. And I just it just makes me think of the question: how many of you are splitting your trades when you like open and close them? I would hope not very many of you are doing that. I certainly, like, if I'm taking a 4-leg trade like an iron condor, I'm usually opening and closing everything, especially in a 0-day environment. Like in a short-term trade, I rarely close them out separately. In a longer-term environment, like we've done it in waterfall income, we did it a couple times with some rolled trades, but that was because we were out way further than just a day. Okay. So anyway, if you're taking short-term trades, usually, my best practice is if you open the trade together, you close the trade together, win or lose. If you want to talk about fragmenting the trade or segmenting the trade, then you're probably using a higher duration. You're probably using like 30, 45, 60 days or longer. That gives you a little bit more flexibility. Okay. All right, Ernest says I close the entire ice. Yep, exactly. Yep. So if you take the iron condor, close the iron condor, you take a broken wing butterfly, you close the broken wing butterfly. You take the remember, by the way, that $1.35 trade we took last week. Let me see. I mean, it's going to be done and over with now, but let me go to 14 days filled. Looking for my SPX trade. Where was that broken wing that we closed out for like 30 cents? I'm guessing that's trading for like 5 cents right now. If anybody's still hanging on to that one, that was like the 70, 40, 70, 50 broken wing butterfly. Doesn't matter. We grabbed $105 out of that trade in a day. So I was pretty happy with that result. But now that we're lower, it's like that thing's like guaranteed to be profit. All right. Anyway, here's price action for the day. Now I'm starting to see some real-time levels like 68, 35, maybe. But like I said, look left, maybe some resistance there, and price just kind of hangs out. The plus minus on the day, by the way, plus or minus 30. And I'm sure this was much higher when the day started. I'm surprised the IV rank is still low at 17.7. Just bought the broken wing butter. There you go, Snapper. So that $1.35 is now at 5 cents. Freaking sweet, man. That was a good trade. What is your suggestion when entering multiple positions on Iron Condor? So meaning what, Ernesto? You're taking like 5 contracts. So would you take this? Let me just go to today. Are you talking about like this trade here with multiple contracts? So you have the same strikes, you're just doing multiple contracts. Well, I think you'd be getting greedy if you wanted to scale out of them. Like, so for example, if I took today's trade, let me use this as an example. Okay. If I took today's trade, so this would be the 35. So I have a sell 6835 and a buy 6840. Okay. And then I have the sell 6715 and buy 6710. Okay. So that's my trade. Like that's my daily profit play is these four legs together, right? So in total, this was a $1.05 entry. So if I did this on one contract, I take a $1.05 credit and I'm going to try to close at 75 cents debit or lower. That's what I will try to do. Okay. Now, if I did 5 contracts, it doesn't really do me any good to say, well, I'm going to take the 75 cents on one contract and then I'm going to try to take, 50 cents on a second contract and then try to take 40. All you're going to do is, I feel like what you're asking me is, should you stay in the trade longer and close out more positions later at a better? No. My answer to that is no, because the best probability of the trade is take your 20, 25, 30% profit and just be done. That's the best trade. Like, you want to keep your win percentage high, that's the best trade. So however many contracts you want to trade, it's just one trade. I would never try to scale out of this thing and try to hold on longer for the day. There's just way too much gamma risk. But if you're comfortable, so instead of getting $1, just trade 5. Well, if it was, I'd still get a $1.05 credit, right? I'd close at 75 cents debit or lower. And the net result, so one contract result would be a $30 winner, and a 5 contract result would be $150 winner, right? But my max risk is $3.95. And my max risk, and I can just take this out, so this would be $1, right? So $3.95. My max risk here would be $3.95 times 5. So it's a big difference. $3.95, so $19.75 max risk. And that's the only thing I try to drive home with daily profit play is, look, if I want to make 100, 150 bucks a day, I have to risk $1,000 to $2,000 a day. Not a lot of people are comfortable doing that. So if you're not comfortable doing that, be comfortable winning 30, 40, 50 bucks a day. Like yesterday, I was risking $400. I made $95. I'm okay with that. Oftentimes, I'll make 40 or 50 bucks. I'm okay with that. So it's just it's a game of risk. If you're comfortable with $2,000 risk, go after the 150 to 200 bucks every single day. Cool. But if this loss hurts emotionally, then you're trading too big and there's too much risk. So risk less. Don't make it about the loss. Don't make it about the pain of losing. It's like, just take a good trade. A loss shouldn't feel bad. It sucks. It's annoying, but how do you lose in daily profit play? The market has to do something pretty unusual. It has to do something that the market makers like allowed price to slide higher or lower. Yeah, I saw your email, and again, like, it's fine. You can do whatever you want, man. I mean, if you want to take one contract at $1 and then put a second one, I don't know why you're asking for more credit, but it's like, what is price going to do to give you more credit? Price has to go further into your call side or further into your put side. It's got to threaten your levels in order to get filled at higher credits. A $1 credit on like a 10 delta or 15 delta is a great fill. Like a dollar credit on a 5 wide, that's a pretty good fill. So you're probably not going to see a lot of 125s and 150s and 175s unless price is literally threatening your call side or put side. So I think you're better off, like, just, I don't know. I feel like you're making it a little bit more complicated, because if you want to go for higher credits, you're asking price to threaten your upsides and downsides. Omar, I have a question, if you don't mind. Does the max loss change in case the market stays in one direction? No. Does the max loss change in case the market stays? No. No, I mean, the max loss is already predetermined. So if price goes 5% higher, I'm only risking 395 today. If price falls 10% lower, I'm only risking 395 today. So nothing happens to my risk. If I get filled for $1.05, the most I can lose is a $5 spread. I take away the credit, which is what I pulled in. So the most I can lose is $3.95. That's it. Like, the market can literally do something crazy to the upside or crazy to the downside, and our risk is the same. Yep. Okay. And gosh, I'm a little bummed that we didn't see like better flows to the upside. See how these like are barely positive right now, and yet price is up. I mean, price is up 50 freaking points from the bottom. 50 points. And there's not like a single like positive gamma up here other than this like 68 30 35 zone. Again, I mean, I think our levels are still pretty good. Um, Fact of the matter is, like, from this low to this high is 50 points, plus or minus is like 30 on the day. Um, I mean, price is going to do what it's going to do. I think it would be wild if price today is all the way up here and holding. That would be, to me, I'd be like, what a stupid day. And honestly, when I lose on daily profit play, that's pretty much my reaction. We don't take trades in daily profit play expecting to lose. We take trades like, this is what the market should be doing today. It should stay within this range. And it can do all sorts of crap to stay inside the range, but it usually does. So if it didn't stay inside the range, what a stupid day, right? If it went through this, what a stupid day. Like, I get it. And I'm not saying I'm building in an excuse, because the one thing I can control is my risk and my trade size. But when I do lose, it's usually like, wow, I'm surprised the market did that, right? So I'm not unhappy with our trades today. In fact, since we did go up here, I think that we're going to be fine with that like 35 and 40 zone. And if price recenters, we probably have a pretty good profit. So, I mean, our trade is trade for like a buck 20, buck 30. I'm down, 20 cents, 30 cents, no big deal. I'm going to put this, I'll keep it at 75. I might lower this to maybe 60, 65 or so as we're in session, like maybe for the next hour while we're together. I'll go to 65 and see if I can squeak out just a tiny bit more profit, since I do think we put it up at a lower delta, got a good fill, and we'll see what happens. But I want to keep a close eye on this price action. So I'm going to park this up on my other screen. All right. And let's do this. Okay, so hopefully level wise today things look range bound. Um, I do have a 45 and 50. I want to measure this really quickly. So if we go to that 45 and 50, I mean, we do have a butterfly trap right in here that would be with the VIX. We measured like a 19 VIX. We shouldn't see price getting up above that level. We shouldn't, based on this gap lower. That also is way above. If I go to my daily profit play and my ADR, ADR has bumped up a little bit. Nope, it's down to 63. So we shouldn't see really price action above like 60 points. It's already up 50 for the day. So my point is, I think that our call side is pretty safe. I think our call side is to be safe. It might, test like this level, which is right about now, this level, which is right about now. But I think this thing like rolls back over, and our call side is safe. Our put side, we'd have to have like another nasty spill to the downside for that to be threatened. So I don't know. I mean, the greedy side of me is like, look, I think we have a good trade. I think we could probably go after like a 50-cent debit or lower. But in case this thing starts to like really accelerate, don't test it. If it recenters, we get 30, 40 cents, like take the profit. Okay. There's no reason to try to be hero to and hold this thing all day. There's clearly way too much risk with a high volatility move. We're right on the cusp of those vol suppression funds. Between 17 and 18, vol suppression gets really dicey. So we were up here to 20 plus overnight. We've retreated obviously to 1835, but that's right on the cusp of like vol suppression funds are either really active and trying to like, push down the VIX, or they are right on the verge of like stay out, get long volatility, and prepare for some more downside. Okay. All right. So we got that going on. Let's see. All right. Very good. Okay, so hopefully a good winner today on daily profit play. We had a full winner yesterday, which was excellent. We had a nice setup on waterfall income. I got a couple of pending orders that have not filled yet. So my working orders for waterfall pending. Where'd it go? This one is pending. This one is pending. So those still didn't get filled from yesterday. Sean, I got to ask you, what's the trade looking like that I took on waterfall yesterday? So waterfall income, the trade that we did take yesterday. Let me go into the tracker here. So the trade was a 64.60. So we went out to the 26th, 64.60. Oops, 64.90. So 64.90, 80, 70, and 60. So I got filled for 55 cents. Is trading for 60. I got filled at 55. It's trading for like 60, 65 right now. Not bad. Deltas have switched quite a bit. This was like a 7 delta yesterday. Now it's a 20 delta. Let me see one thing. If I buy, sell, buy, let me change the crap. So it's messing up all my buy power because it's overlapping with the other trade. Fudge. Let me see. I think I took this for every account. I did. What I was trying to see here is just this position. That'd be 20 wide, only a 5 wide profit trap. That one's going to be more credit, but more risk. Let me move these down a little bit. Actually, you know what? Let's just start from scratch. If we went 50, yeah, now we're going to, let's see how wide these get. The strikes change so much. Anyway, yeah, if it's like 65, 75 cents, I still think the trade is pretty good. We were only risking like $450. We have $1,000 profit trap, risking $450. I still think the probability of profit is we hold above like, 6,600, 6,700. We possibly stabilize, try to push back up to the 69, 7,000 handle this year. See what these moving averages hold. But yeah, for 65, 70 cents, it's a pretty decent fill considering it's risking less with a $1,000 profit trap. Just my 2 cents. All right, very good. Newsbreakers. I'm going to try to price in some trades. We have AMD today after close. We have Robinhood, AppLovin, Dutch Brothers, Qualcomm, ARM Holdings, Snap today, or I'm sorry, tomorrow after close. DraftKings on Thursday. So I'll take a look at some earnings plays for this week. I love how financials like Goldman Sachs and Morgan Stanley, who just crushed earnings, by the way, are now saying like, oh, the market might pull back. So GS is sitting here near all-time highs. JPM is sitting here near all-time highs. And yeah, I don't know. We'll see. But I think it's noise. I mean, we had pretty strong earnings. I do think what is really going to matter a lot, and I know this is kind of crazy, but because we are so heavily concentrated in this market with market cap, NVIDIA earnings in November, I think are going to be like a bit of a, I'm not going to say a make or break, but I'm going to say it needs to do really well. Like NVIDIA needs to surprise again to the upside downside. It's a $5 trillion company now. I think it needs to stay pretty strong to keep this like AI narrative going strong. And then, SMH, you want to see this also stay up. Like last week, even though the market was falling market breadth wise, semiconductors were higher. I mean, look at this push here. Big push in semiconductors. Mag 7 was up. Tech was up. Look at XLK is tech. Like it's just very similar price action. XLK up for 1, 2, 3, 4 days in a row. Semiconductors, same thing, up 4 days in a row. Look at your QQQ up 4 days in a row. Like that was pretty much the correlation last week. Yes, they're also in. So one click trading and they're also in the tracker. Yep. So we have some pending orders and newsbreakers. We did some swing trades. We got a couple that are filled. So I'm going to price out some more today and see if I like the way some of them set up. Okay. And then one more thing. So what I'll do here is I'm just going to hang back and just keep an eye on our prices today for our daily profit play. Right now it's down about $10. Our 35 and 40 still look pretty good. The delta is a little bit higher because price has been going up all morning after the open. But let's go back to today. So the delta is around a 22 delta. It's on the high end of the expected move. We're still like a plus or minus 26. If the market recenters at all, I mean, again, this is my opinion here, but it's like I don't think price is going to go all the way up here and stay up here. If we come up here, I think we fall back down. If we come up and fill the gap, I think we fall back down. I'll take my chances on the broken wing butterfly. If we get filled for $1, I'm only risking 400 to potentially make 600. So if we're up here towards the highs of the day, it's like I'm hoping that 50 level is, I don't know, it's going to be close. I don't think we're going to get filled on the broken wing, honestly. If this level of support here holds as resistance, if this level support holds as resistance, then our call side is totally safe. So as tempting as it is to like lower my debit to like 50 cents or 40 cents or even hang on to this for a full win like we did yesterday, probably not worth it in case, we're going to come back and revisit the lows. I mean, I don't want to be, like I said, don't be a hero when the volatility is way higher and we've got some major gaps to deal with. Okay. All right. So what we're going to do is the double up. Let's see, double up trades yesterday. Unfortunately, were 2 small losses. Pinch point scanner. I'm running a live trading session and masterclass tomorrow at 2 p.m. The session that we did yesterday, where I went through the pinch point session and webinar, we're going to go ahead and queue that up and play that again for anybody that is wanting to join me for a live trading session tomorrow at 2 p.m. I'll post that right here. So 2 p.m. Eastern time Wednesday. It's going to be a pinch point masterclass plus live trading. Oops. Live trading session. Okay, so we'll do that 2 p.m. tomorrow. You'll see in the presentation here that Deanna's going to queue up. We'll run through the whole presentation. You'll see me also show the scanner for the week. And we have about 20 to 25 on the scanner that we'll be dissecting tomorrow in class together. We do, I mean, it's a lot of trading in a good way. It's like, it's high quality trades. Every trade offers most likely a 100% return. And for me to increase my win percentage, I'm very happy most of the time setting my broker profit target at like 40 and 50%. I do a lot of 30s, 40s, and 50s. So we can make up to 100%, but that would require that we have to hold it all the way to expiration. And I rarely do that. So we take these trades, they're swing trades. We set the trade up, get filled, set the take profit, 30, 40, 50%. We're winning almost 86% of our trades, and most of them close out automatically. So for me, again, up, down, sideways markets, we don't know if it's going to be the market's pulling back, 5% or 10%. The market's going to go hit all-time highs. It doesn't matter because individual stocks, what the pinch point scanner has given us is really good technical setups for high volatility and direction coming your way. So, all right, we'll queue this up, and we got class on Wednesday, 2 p.m. Look for the updates in Telegram for daily profit play. If I find any good trades on newsbreakers, look for that for the alerts as well. And we'll talk soon. All right, queue this up. Thanks, Deanna.
Bigger winners, big winners, small winners. Not everything's going to be a winner, but this trades up or down. The pinch point scanner is a tool for traders. Okay, it's a tool for traders. There is a service that I run with it. If you'd like to have my trade alerts to go with it, that's available. But just the scanner itself.
All right, guys, I'm gonna go fix the audio for a quick second. It looks like Chris's audio is acting a little bit funny. So give me 1 second to get that all sorted out. There we go. This should hopefully fix it. If anybody gets that feedback, just let me know in the chat. I think this is fixing it.
Bigger winners, big winners, small winners. Not everything's going to be a winner, but this trades up or down. The pinch point scanner is a tool for traders. Okay, by itself.